Welcome to today's earnings deep dive focusing on Starbucks' Q4 2025 performance. We'll dissect the key highlights from their latest report. Before we begin, please remember that this analysis is for educational purposes only and does not constitute investment advice. Key takeaways. Revenue performance. Starbucks reported solid revenue growth in Q4 2025, driven by strong performance in North America and continued expansion in international markets. The exact percentage will be discussed further in the next section. Profitability metrics. The company demonstrated improved profitability metrics, including a higher operating margin compared to the previous year. This improvement reflects enhanced operational efficiency and effective cost management strategies. Guidance update. Starbucks provided forward-looking guidance indicating continued growth in the coming quarters. The projected revenue and earnings targets suggest management's confidence in the company's ability to sustain its positive momentum. Investment thesis. Our analysis will present a balanced investment thesis, considering both the opportunities and risks associated with Starbucks stock. We'll delve into the factors that support a bullish outlook, as well as potential headwinds that investors should be aware of. This analysis will give you a well-rounded view of the company's financial health and future prospects. Starbucks' Q4 2025 performance was primarily driven by several key factors. Revenue growth in North America remained robust, fueled by increased same-store sales and a rise in average transaction value. The company's loyalty program continues to be a significant driver, enhancing customer engagement and repeat visits. International markets, particularly China, also contributed substantially to overall revenue growth, demonstrating the success of Starbucks' global expansion strategy. From an operational efficiency standpoint, Starbucks has implemented various measures to improve its profitability. These include streamlining supply chain operations, optimizing labor costs, and leveraging technology to enhance the customer experience. The company's focus on digital initiatives, such as mobile ordering and personalized marketing, has also played a crucial role in driving sales and improving customer satisfaction. The increase in operating margin reflects the effectiveness of these initiatives. Specifically, the revenue breakdown shows that North America accounted for approximately 65% of total revenue, while international markets contributed the remaining 35%. The growth rate in China exceeded expectations, driven by the opening of new stores and increased demand from local consumers. Furthermore, Starbucks product innovations, such as new beverage offerings and food items, have helped to attract new customers and retain existing ones. These factors collectively contributed to the company's strong financial performance in Q4 2025. Starbucks' Q4 2025 performance was primarily driven by several key factors. Revenue growth in North America remained robust, fueled by increased same-store sales and a rise in average transaction value. The company's loyalty program continues to be a significant driver, enhancing customer engagement and repeat visits. International markets, particularly China, also contributed substantially to overall. In terms of profitability, Starbucks aims to achieve a further expansion of its operating margin through continued operational efficiencies and cost management strategies. The company plans to invest in technology and digital initiatives to enhance the customer experience and drive sales. These investments are expected to yield long-term benefits and contribute to sustainable growth. Analyst consensus aligns with management's guidance, with most analysts projecting similar revenue and earnings growth rates. However, some analysts have expressed concerns about potential headwinds, such as rising labor costs and supply chain disruptions. Overall, the market sentiment towards Starbucks remains positive, reflecting confidence in the company's ability to execute its strategic initiatives and deliver strong financial results. The confidence level in the guidance is supported by management's track record of consistently meeting or exceeding expectations. Following the Q4 2025 earnings release, analyst estimate revisions have been general. Several brokerages have raised their EPS growth rate projections for the next fiscal year, reflecting increased. Starbucks loyalty program digital initiative momentum. The consensus EPS growth rate is now estimated to be around 12 to 15%, indicating a strong outlook for the company's earnings potential and increased competition. In terms of valuation, Starbucks stock currently trades only. This is not investment advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Similarly, the enterprise value to EBITDA, EV/EBITDA, multiple is also elevated, suggesting that the stock is relatively expensive at current levels. However, it's important to note that Starbucks' premium valuation reflects its strong brand reputation, consistent growth, and high profitability. Price target ranges from brokerages vary, with some analysts setting targets above the current stock price and others setting targets below. The average price target is approximately $120 per share, indicating a moderate upside potential from current levels. Whether the stock appears cheap or expensive depends on an investor's individual risk tolerance and investment horizon. Investors who believe in Starbucks' long-term growth potential may find the current valuation justified, while those who are more risk-averse may prefer to wait for
Following
a more
the
favorable
Q4
entry point. 2025 earnings release, analyst estimate revisions have been general. Several brokerages have raised their EPS growth rate projections for the next fiscal year, reflecting increased Starbucks loyalty program, digital initiative momentum. The consensus EPS growth rate is now estimated to be around 12 to 15%, indicating a strong outlook for the company's earnings potential and increased competition. A potential economic slowdown could also impact consumer spending and affect Starbucks' financial performance. In terms of valuation, Starbucks stock currently trades only. This is not investment advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Similarly, the enterprise value same-store sales growth. Monitoring same-store sales growth in both North America and international markets will provide insights into the company's ability to maintain its revenue momentum. Operating margin expansion. Tracking the operating margin will indicate the effectiveness of Starbucks' operational efficiency and cost management strategies. New store openings. Following the pace of new store openings, particularly in China, will provide insights into the company's global expansion efforts. Loyalty program metrics. Monitoring the growth and engagement of Starbucks' loyalty program will indicate its success in driving customer retention and repeat visits. These factors will help in understanding the long-term viability of Starbucks as an investment.